Good morning, everybody, and thanks for coming in today. My name is Brian Lynch, and I'm with the State Tax Agency, which is properly known as the Mass Department of Revenue. So today we're going to talk about the Senior Circuit Breaker Tax Credit, which is kind of a funny name, right? Circuit breaker. People say, like, what's up with circuit breaker? Do I get money off my electric bill, or how does that work, right? The concept is that for seniors, when your real estate tax becomes a burden or becomes overwhelming, that's when the state tax credit is going to kick in or get activated to try to help you out. The general idea is that seniors are generally on a fixed income, but as we all know, our real estate tax seems to go up every year, right? So every year it gets a little bit more challenging because here's our income and our real estate tax continues to climb. And that's why this tax credit is in place for seniors to try to help them out. Renters can qualify as well. You don't have to own your home, and we'll talk about the renters in a minute. This credit has been in place for 20 years, and sometimes people just find out about it at a session like this. And if you think you qualify for 2021, the tax year that's coming up, that we'll be working on our taxes in the next couple of months, if you think you're eligible for 21, the prior 3 years are open as well. So I said the credit's been around for 20 years, and the state is generous, but to a point. So in the federal government operates the same way. The IRS is the same way. Like if you overlooked a credit or you didn't get a refund, you have 3 years from the due date of the return to file for it. And if you can't do it within 3 years, they're going to say, I'm sorry, but you're too late, you missed it, okay? So back to circuit breaker. Again, the general idea is to help people when their real estate tax gets to be too much. The first criteria is you have to be 65 or older by the end of the tax year that you're applying for. And if you're married, filing jointly, as long as one spouse is 65 or older, you're still in the running, you're still eligible, right? There's some income eligibility that we should look at. So let's look over on the right-hand column of the green handout where it talks about 2021. So it's saying that in order to be eligible and to apply for the credit, if you're single, your total income has got to be less than $62,000 for 2021. If you're married filing jointly, your total income has got to be under $93,000. Some folks are head of household because they have a dependent person living with them in their household where they're providing more than 50% of their financial support. So maybe you have a relative or someone else that you're kind of helping out and you're providing the financial support. That person is a dependent of yours. You would file as head of household, and that qualifying income for this year coming up is $78,000, okay? The other thing we need to look at is the assessed value of your home. And again, this has to be related to your principal residence in Massachusetts. And we're going to talk about real estate tax in a minute, but you can, if you own property, if you have a vacation place in Maine or New Hampshire or Florida, and you're paying real estate tax there, unfortunately, you can't incorporate the real estate tax from another state. It's really on your principal residence. And again, the whole idea is to help people out that are having a difficult time paying their real estate tax. That's the idea, right? The assessed value of your home cannot exceed $884,000 for 2021. And that's not the amount that the real estate agent promises you that they could sell your house for. It's the assessed value at town hall that's your real estate tax is based on, okay? That's what town hall is working with, whatever the assessed value is. It has to be less than $884,000. So kind of like some preliminary who's eligible, right? Let's talk about the calculation, the math. It's very straightforward. It's very easy. And that's why they send me to talk about it. If it was more complicated, they'd send somebody else, okay? So what we want to do is I want you to think of your total income. And I want you to incorporate your Social Security benefit, bank interest, any IRA distribution that you might have, if you have a pension, whether it's public or private, doesn't matter. So all of those income amounts, and those income statements should be showing up in the next couple of weeks. You're supposed to have those by the end of January so that you can get your taxes done, right? The nice thing about this is we're not looking at assets. We don't want to know how much money you have in your savings account. We don't want to know, it's not part of the calculation is not what is the amount sitting in your IRA account. It's only the distribution, the money that comes out during the year. Basically, I like to kind of think of the money you put in your pocket, right? So now that everyone kind of has a general idea of what their income is like, I want you to take 10% of that amount. So pretty straightforward. Your income's $40,000 total. When you add everything up, 10% is $4,000, right? That's half the equation right there. We're halfway there. The other half of it is you should have kind of an idea of what you're paying in real estate tax at home, and you're able to add half of your water and sewer bill to your real estate tax. By adding half of your water and sewer bill to your real estate tax, we're trying to increase the credit for you. We're trying to help you out because the water and sewer has become very expensive as well, right? So by adding half of your water and sewer to the real estate tax, trying to boost it a little bit, kind of try to make it work for you a little bit. So now we've got two amounts, two figures. I want you to compare the two. This credit through the Commonwealth of Mass, through your real estate tax, through your income tax return, is going to help you out if that real estate tax amount, together with half your water bill, is greater than 10% of your income. And if it is, good for you. It's going to work. You're going to benefit by it. Okay. The maximum credit, as you can see on my handout, for 2021 is $1,170. I wish everybody could get $1,170. That would be great. But that's not really, it's not going to happen because everybody has different income and everybody pays different real estate tax, right? So everyone's numbers are going to be different. Some people, when we talk about the equation, they say, now that he told me more about it, it's not going to work for me because my real estate tax and half my water bill is not greater than 10% of my income. So I'm out of the running. It's not going to work. Other people say, now that I do the math and I think of the numbers, my real estate tax and half my water bill is greater than 10% of my total income. And this is good because it's going to help me out. Some people can qualify for the maximum. Some people might get the full $1,170. Other people might get $300, $500, $700. Everyone's different, right? The nice thing about the credit is it's refundable. And what I mean by that is anytime you if you're eligible for a tax credit, whether it's with the federal government or with the state of Mass, when you do your tax return, they do the math and you're going to have to pay a certain amount of tax for the year based on your income. The credit kind of comes at the end of the tax return. And if you're eligible for the credit, we're going to apply the credit towards the tax that you're going to owe to the Commonwealth of Mass. And it's nice. The goal is really to diminish the tax. Let's try to bring it to zero. Wouldn't that be great and not pay any state tax at all, right? Most tax credits, if you're able to wipe out your tax and you get it to zero, that's as good as it gets and that's the end of it. The circuit breaker goes a step further. It goes beyond that. So even if you're eligible to knock out your state tax, and now I don't owe any state tax because I get this circuit breaker credit, which is great, and once I knock out my tax, I still have $300 remaining. The Commonwealth is going to send you a check for $300. So that's what I mean by refundable credit is once you wipe out your tax and you still have credit available, you're going to get that amount refunded. We can either put it right in your bank account if you want, or we'll send you a check, whatever you want to do. Okay, so that's the general idea of circuit breaker. The best thing I could tell you this morning is that you're very lucky here in Chelmsford that you have volunteers that are with AARP. AARP has it's called Tax Council for the Elderly, or TCE, and they prepare tax returns here in the center, your federal return, your state return. They do it for free. They do it on equipment that's provided by the IRS. They send it electronically by computer to the IRS and to us at the state. It's the best thing I could tell you this morning. We're here early this year. I've been coming here for many years. Natalie contacted me, and it's kind of early. I even looked, yesterday at work, I looked for tax books, because I always like to bring the tax books with me. but we don't even have them in the office yet. It's so early in the season. So we're waiting for the shipment from the printer on the tax books. I wish I had them for you, but I tried yesterday. So really, what you should do is you should make an appointment on your way out at the desk as you come in. Say, I want to set up an appointment with the tax volunteer. And you bring in all your information, you bring in last year's return, they'll sit down with you and go through the whole thing and help you out. They're very familiar with this tax credit that I'm talking about today. Did you have a question?
Yes, sir.
Okay.
I'm a retired state worker.
Yes.
And I don't pay state income
Okay.
tax.
Right. Okay.
Do I need to leave?
No, not at all. Okay. So the question was, I'm retired from the Commonwealth of Mass. Congratulations. Good for you.
30 years in a prison.
Really? Yeah. I have 37 with revenue, and I think next month might be
I'll
my...
trade you.
I'm approaching that myself. So a lot of public pensions, they're contributory pensions. We pay into it as we're working. And then when we get the benefit, the state doesn't tax it. So it's kind of like a benefit for public employees. Same thing for if you work for the town of Chelmsford, police officers, firemen, school teacher, town hall, anybody that works for a municipality like city or town, the state, federal pensions, similar, the state doesn't tax it. But it doesn't mean that you're not eligible for the circuit breaker credit. If the numbers work, you're still eligible for the credit. The only trick is, and sometimes it creates a little bit of confusion, because the state pension doesn't appear on the state return because we don't tax it. Another item similar is Social Security. The state doesn't tax Social Security. So even though you might be getting a Social Security benefit, there's no place to put it on the state return because we don't tax it. However, when we're trying to determine, are you having a hard time with your real estate tax? Do you need a little help from the state to kind of offset that increasing real estate tax? When you do the math, when you actually sit down and do the calculation, we're going to ask you to add in those items that are not taxable by the state. So when I talked about total income, it would include your state pension. It would include your Social Security. So again, sometimes it throws people off a little bit because people say, I don't pay state tax on my pension, or I don't pay state tax on my Social Security, which is great. But when we're trying to determine, when we try to weigh out, is your real estate tax more than 10% of your income? We need to look at your total income, all of it. Okay, does that help? Okay,
Yes, sir.
Okay, excellent, good, good. Question? No. Okay. There was a woman that I talked to earlier, and I mentioned the water bill and the water and sewer, and she said, well, I live in a condo complex and it's part of my fee. It doesn't mean that you're still not eligible to factor that in to the equation. So I told her what she would need to do is get in touch with like the property management people or the trustee, who's ever paying the bills for that condo association. And that woman has a certain percentage of ownership. That's what her common or her homeowners association fee is based on. She might own 10% of the complex. Maybe she owns 20% of it. It depends on how much square footage she has of the total space. And that's how they determine what percentage of the expense she's going to pay. So I said, get in touch with the building manager, the complex manager, find out what they paid for water and sewer for the whole place. You apply your percentage of ownership. So I might own 10% of it. I'm going to take 10% of the total water and sewer bill for the whole complex. And then earlier I mentioned we're going to take 50% of that, half of it, right? So I'm just, the point I want to make is just because you're living in a condo association and your water and sewer is part of your total fee, it doesn't mean that you can't utilize that expense towards the circuit breaker credit. Okay. Do people have questions up to this point? I will be available after the little presentation to talk one-on-one with you because I don't expect people to talk about this is my income and this is what I pay in real estate tax. So I'm happy to talk to you. I'm not going to run away. I'm happy to talk to you one-on-one. Again, I think the best thing is to make an appointment with the tax volunteers here at the Council on Aging. It's the best thing you could do today for yourself. People, I mentioned earlier that if you pay rent, renters can qualify as well too. So for renters, we're going to look at this 10% of their income. The income measure is the same, right? But because they're paying rent, we're going to look at 25% of the rent that they pay, provided that they're not living in any type of subsidized housing arrangement. So if their rental apartment is subsidized by the state or some type of federal subsidy, it's the idea, the thought there is they're already getting like a reduction and they're already getting a benefit on a reduced rent. And so unfortunately, they're not able to, they wouldn't qualify for the circuit breaker credit, okay? So we're gonna compare, if 25% of someone's rent is more than 10% of their income, then they're eligible for the credit. Same numbers, same calculation. It's just instead of the real estate tax and half the water bill, we're gonna look at 25% of their rent that they pay, okay? Questions up to this point? No? Yes, sure.
Under exemptions,
Yes.
if you're over 65, you take off $700
That's true, yes.
off your total income.
Yes, that's true, yes. And if you filled out a paper return with us last year, we're gonna mail you with a tax book. You're gonna get the paper return within a couple of weeks from us. But people that filed by computer, whether it was here or you went to your accountant and he did it on the computer and sent it to us, we assume that you're probably going back there again and you really don't need the tax book because it's gonna be done again by computer, and it's expensive to print all of that material and to send it out. And years ago, we used to see it, all that tax booklets and stuff at the post office and the library, and and a lot of people, every time they went to the post office, they'd grab it, say, I gotta do my taxes. So they'd grab the stuff and take it home. And then in April, they have a stack of tax information like this. And then once they do their taxes, they end up throwing it away because they don't need all that. So there was a lot of waste associated with paper forms. And kind of an interesting fact is in the Commonwealth of Mass last year, 90% of all the tax returns that we got, the 3 million income tax returns, were sent to us by computer. So only 10% of the population is still using paper at this point. And every year we find that the computer sent returns go up and the paper returns go down. So I think eventually that the paper will probably be completely outdated. And we're seeing this in a lot of aspects of what we do. So the paper stuff everything's on your phone, it's on your computer, it's on your laptop. We're always moving in that direction, and taxes are included. So any other questions that you might have for me? Okay, all right. So you kind of get the gist of it, right? You got the general idea? You're good? Okay. And again, I think the best thing you could do is make an appointment with the tax volunteers. You're lucky you're early in the season, because sometimes there's only so many appointments. And like if I was here later in the season, they say, oh yeah, we have it, but we're booked and we don't have any more appointments. And, so it's great that the people, they're very capable, they know what they're doing. Most of them have been doing it for years. They're trained by the IRS. They have a very good organization that through AARP, again, it's called Tax Council for the Elderly. It's very, very good.
Do you make that with the reception?
Yeah, right as you came in, yeah, just maybe on your way out, you just check in at the desk there and you say, I just want to make my appointment, and they'll help you with that. Any other questions that you might have for me? Okay, so I want to thank you for your attention, and the folks at home, I hope it was helpful. On our handout, we do have, we're going to provide you with our 800 phone number. We also have a website where you can visit and get some more detailed information if you want. You can call one of our representatives. We'd be happy to talk to you about it if you have questions. So again, I think my friend from the cable show, cable TV, you're going to show the handout and provide them with the contact information, right? Okay, which is great. Okay, sure.
This is only for 2021. You can't go back to these.
Okay, so let me just let me just reinforce that. So on my handout, I have 2021, because everyone's working on that right now, or in the next couple of weeks. But the prior 3 years is still available. So the question was, now that I'm learning about it today, and I think I might be able to take advantage of it for 2021, I didn't know about it in the prior 3 years. And I said that this credit has been in place for 20 years, but the state will only allow you to go back to the prior 3, okay? So, and it's the three years from the due date of the tax return. So 2018 is a little bit time sensitive at this point, because if you're eligible for 2018, and if you don't apply for it by this April 15th coming up, you missed out. So next year when I come back, I'll have 2022 on my handout, and 18 will have dropped off because we're moving, right? We only carry the prior 3 years. So there's 2 ways to look at it. If you filed your tax return, you can make a correction or amend to say, I wasn't aware of circuit breaker. I'm going to refile my return. This time I'm going to do it correctly. I'm going to file a second time, include the circuit breaker, and probably get a refund because you're probably all squared with the prior couple of years. But now if you're eligible for the credit, you're probably going to get that amount refunded. Other people say, you know, the reason why I wasn't aware of the credit is because I have no need to file a state tax return. I don't have to file because I got Social Security, or my other income is not enough to require me to file a state tax return. But that doesn't mean that you can't go back, and you have to file for the prior 3 years if you want to take advantage of circuit breaker. And again, it's refundable, which is great, because you don't have to have a tax liability, income tax liability with the Commonwealth of Mass in order to utilize or to take advantage of the credit. So again, I don't pay state tax because I'm retired from the state, and my pension's not taxed by the state. But I'm paying real estate tax, and plenty of it, and when I do the math, it seems like I could get get the circuit breaker credit for $400. We will send you, as long as you file the return, you have to go through the motions, 0 tax, but you're going to get that $400 refunded.
Even electronically?
Definitely, yes. So whether it's electronically or whether it's by paper, same thing. The electronic method just kind of mimics the paper. It's based on that we're all familiar with. And when you file your return, if you get a refund, if you want, we'll put the money right in your bank account. We just ask you for the routing number for your bank and your account number. The money goes right in, which is really the way to go. It saves a trip to the bank. It's faster. It's for you and for us. It's quicker. But if you'd rather get the check mailed, we'll be happy to do that too. So that's all I have for you this morning. I hope it was worthwhile. I hope you benefit by it. And I always say, tell your friends and family about it, because there might be people that your neighbors weren't able to come this morning, but you say, you know what, I think you might be able to take advantage of that. And if they want to call us to talk to one of us, we'd be happy to talk to them about that. Okay, so thanks again for coming, and good luck, and enjoy the day.